Every time you buy something, your morning coffee, maybe ordering something online, even these huge global business deals, there's this invisible force making the payment happen. But how does that actually get sold? I mean, the tech behind it, the service, it's something we rarely think about. So today, we're doing a deep dive into something really specific, but also everywhere. The sales strategy for payments products. You might think, okay, payments are just payments, right? But our sources show it's way more complicated than that.
Oh, absolutely. It's true. The payments world, it's anything but simple. It's really fragmented, always changing, with tech and regulations popping up constantly. So our mission today is sort of cut through all that complexity. We want to give you a solid framework, a way to understand how companies actually sell these essential products. And crucially, why just having one approach, like a one-size-fits-all strategy, well, that's a huge pitfall. You just can't afford to think that way.
Right. And to help us figure this out, we've looked at quite a few sources. There's a detailed strategic report, some really good industry analyses too. They really shine a light on how dynamic this whole sector is. So, one of the first big things that jumped out from the sources is this idea that there isn't really a general market for payments products. It just doesn't exist. It's not like selling, I don't know, a physical thing where you can just put it out there. Payments need a much more tailored approach.
Exactly. And because it's so dynamic, companies often mess up right at the start by not having a really clear vision. And this isn't just, some vague mission statement. It's about answering fundamental questions like, what exactly are we selling? Who are we selling it to? What specific needs are we actually solving for them? And why should they choose us over someone else? What makes our product genuinely different? And then the practical stuff. How and where will we sell it? How do we keep customers happy? And, how do we hit our financial targets? All of that. This vision, this core understanding, it then needs to become a detailed roadmap, broken down into manageable scoped initiatives. But it doesn't stop there. You absolutely need a feedback loop, constantly listening to the market, seeing how customers react, understanding their changing needs. That keeps the strategy alive. Without that continuous learning, even the best plan gets outdated really fast.
That vision really sounds like the foundation, doesn't it? And our sources break it down even more into sort of three core pillars. First, you have to define objectives. That's the what. And these can't just be wishes. They need to be SMART goals, specific, measurable, achievable, relevant, time-bound. Are you trying to grow revenue? Grab more market share. Keep the customers you have. You need clarity there. Second, identify the target market, the who. This means getting way beyond that fuzzy idea of a general market. Ooh, you need to really understand specific customer needs, their behaviors, how to group them effectively. That understanding, it drives everything else. And third, understand the value proposition, the why. What unique problem does your product solve better than anyone else? Why pick your solution? Knowing this lets your sales team build really compelling stories.
Right. But even with a solid framework like that, companies still stumble. Our sources point out some pretty common pitfalls. A huge one is not starting with customer needs, like really grounding everything in what the customer actually requires. Sometimes companies build what they want to build or what's technically cool instead of solving a real pain point. That's often a dead end. Another trap, analysis paralysis. Spending forever analyzing, making charts, but not actually doing anything. Analysis should lead to action, not replace it.
Yeah, endless meetings about meetings.
Exactly. And finally, just a lack of clarity inside the company. Who does what? Who's responsible for which piece? That can totally derail things. And this is why getting feedback from the sales team, the people on the front line, is so critical. They hear what customers are saying, what competitors are doing. They're your eyes and ears.
Okay, so it's complex, it needs a clear vision, and you need to avoid those traps. But the ground itself is shifting too, right? What are the big trends shaping this market? Our sources talk about the instant payments revolution. We're all seeing it, moving from using less cash to maybe going fully cashless in many places.
It's happening globally.
And it's not just about speed for consumers. For businesses, the real-time data that comes with instant payments, that's revolutionary. It changes how they manage cash flow, inventory, even spot fraud. It turns payments from just a cost into like a strategic data source.
That's the value they'll pay a premium for, that operational insight.
Then there's open banking and embedded finance. Open banking basically lets banks and other platforms share data securely, with permission, of course. This smooths things out, like signing up new customers or making direct account-to-account payments much easier.
Right. It breaks down those old silos.
And embedded finance goes a step further. It puts financial services right inside other apps. Think about applying for a quick loan or paying for something without ever leaving the shopping app you're in.
Yeah, payments become almost invisible. Just a seamless feature, not a separate step.
And the third big trend is the consumerization of B2B payments. Businesses buying from other businesses. They now expect the same kind of speed and ease they get when they buy stuff personally. So, fewer checks, fewer wire transfers, more automated, data-rich digital solutions.
Definitely. And our sources mention payment orchestration becoming really important here. Businesses often end up using multiple payment providers for different things, right? Orchestration helps them manage that complexity, finding the best route for each transaction. So the sales conversation shifts toward helping clients simplify that whole web of providers.
Okay, so you've got all this innovation, instant payments, embedded finance. It sounds great, but also maybe a bit Wild West. How does the industry stay compliant with all the rules?
That's a huge question, and you're right to ask. The payments industry is incredibly heavily regulated globally. You've got layers of national and international laws. They're designed to protect consumers, stop fraud and money laundering, and keep the financial system stable. Companies absolutely have to follow strict standards. Things like PCI DSS, that's the big one, for handling card data securely. Then there's GDPR in Europe for data privacy, PSD2 also in the EU, regulating payment services. These aren't suggestions.
Right, not optional.
Not at all. If you don't comply, you're looking at serious legal trouble, massive fines, and your reputation can be ruined. So understanding this regulatory maze is fundamental for any sales strategy. You have to build compliance in from the start.
Okay, so it's complex, innovative, and heavily regulated. Let's try and map out the key players involved in making a payment happen. Who's who in this ecosystem? Our sources lay it out pretty clearly. At the top, you've got the big card brands or networks. Think Visa, MasterCard, Amex. They run the networks, connect everyone, and set a lot of the security rules.
They're like the highway system.
Yeah, exactly. Then you have issuing banks like Bank of America or maybe Barclays in the UK. They're the ones who actually give us the cards, consumers and businesses, and they guarantee the funds for the transaction. On the flip side, there are acquiring banks, maybe Wells Fargo or WorldPay. They work with the merchants, the businesses, to accept card payments and process those transactions.
Got it. Issuers for the cardholder, acquirers for the merchant.
Right. Then you have payment gateways, companies like Stripe or Braintree, which is part of PayPal. They're the tech piece that securely sends the payment info from the website or terminal to the acquirer. Lots of encryption involved there. Payment service providers or PSPs often do more. Think Worldline or PayPal again. They might bundle a merchant account, the gateway, maybe even hardware like card readers, a bit more all-in-one.
Okay, offering a package deal.
Sort of. And finally, there are independent sales organizations, ISOs. These are third-party companies that resell the services of the banks or PSPs. They act like agents or brokers, connecting businesses with payment processing.
So a lot of different players, all needing to work together seamlessly.
Exactly. It's a busy neighborhood. And this really brings us back to that core idea.
Yeah.
There's no general market, because selling into this ecosystem depends entirely on who you're targeting. Selling to a regular consumer versus a business, it's like night and day. B2C, business to consumer, that's usually a quick sale. Lower value per transaction, often an individual making the decision. They care mostly about convenience, speed, and trusting the site or app, like buying that book online we mentioned. Pretty straightforward.
Relatively speaking, yes.
But B2B, business to business, that's a whole different game. The sales cycles are much longer, way more complex. We're talking higher value deals, bigger volumes, often recurring payments. And crucially, you're usually not selling to just one person. You're selling to what our sources call a buyer team.
Yes, this is key. That B2B buyer team often includes people from finance, from operations, maybe IT, sometimes procurement. And each of them cares about something different. The finance person, they're focused on cost, reconciliation, maybe cash flow impact. The IT person, they're worried about security, integration with existing systems, compliance, API robustness. And the operations lead, they just want things to run smoothly, reduce manual work, speed up processes.
So your sales pitch has to hit all those different notes.
Exactly. Your salesperson needs to speak multiple languages almost. They have to address the cost concerns for finance, the tech specs for IT, and the workflow benefits for operations, often in the same meeting. A generic pitch just won't cut it. It falls completely flat.
Okay, so knowing your audience is critical. Let's talk specifics. What about small and medium-sized businesses, SMBs? What do they really care about? Our sources say simplicity is king for them, transparency too, and saving time. They want something easy to set up, maybe flat rate pricing so it's predictable, ideally something that bundles a few tools together like an all-in-one office toolbox.
The main sales message there is really about Reducing their admin burden.
Yeah.
Making their life easier so they can focus on their actual business. Less time on payments, more time on customers.
Makes sense. Now, what about the other end? Large enterprises and corporations. They've got much more complex needs, right? They're looking for sophisticated stuff like automating their accounts, payable AP automation. They need solutions for handling payments across borders, dealing with currency risk, really robust ways to reconcile accounts and track everything for audits.
Absolutely. For enterprises, the conversation changes completely. It's not just selling a product. It becomes a discussion about a strategic partnership. You're offering a solution that deeply integrates into their core financial operations. It's mission-critical stuff.
And then there's another big group, global e-commerce merchants. What are their main headaches? Cart abandonment seems huge for them, people loading up a cart and then leaving. So they need super smooth, frictionless checkout experiences.
Every click counts, or rather, every removed click counts.
Right. And they need lots of different payments options, especially local ones for international customers. Plus, strong fraud prevention is vital. They're also dealing with complex tech integrations, so the sales pitch for them. It's often focused on boosting their revenue, less abandonment, more completed sales, and simplifying the tech side.
Yeah, optimizing that whole checkout funnel.
Okay, so you know who you're targeting, you understand their specific pain points. Now, how do you actually reach them? What are the go-to-market models, the GTM strategies? Our sources mention a few key ones. First, there's direct sales. That's having your own in-house sales team managing the whole process from lead to close. The big plus, full control over the message, the relationship, everything. Often leads to higher loyalty, higher margins too. But it's expensive, right? Building and running a sales team costs a lot, and your reach might be limited compared to other models. It works best for those high-value, complex products, like the enterprise solutions we talked about.
Makes sense. What else?
Channel partnerships. This is where you sell through other companies, distributors, resellers, maybe other tech platforms that integrate your payment solution. The advantage is you tap into their existing customer base, their network. It can be a faster way to scale, especially internationally. Lower upfront cost, maybe.
But you give up some control.
Exactly. Less control over the final sales pitch, and you're sharing the revenue, so margins are usually lower. Good for more standardized products, maybe. And the third main one is self-service and online acquisition. This is all about getting customers with minimal human touch. Think free trials, really clear pricing pages on your website, automated email sequences. It's designed for scale.
Perfect for simpler products, high volume, maybe lower average revenue per customer, like many SMB solutions.
Right, where the cost of a direct salesperson wouldn't make sense for each deal.
So if we step back and connect this, the smartest companies don't just pick one model, do they? Our sources really emphasize that the most effective approach is often a hybrid model. You mix and match based on the customer segment and the product complexity. You might use self-service for your basic, high-volume SMB offering. Then have a direct sales team focused purely on those complex, high-value enterprise clients. And maybe use channel partners to break into specific new countries or industries. It's about aligning the model to the specific job.
Using the right tool for the right job. Makes sense. Okay, so you figured out who to sell to and how to reach them. Now the money part, pricing. Our sources stress this isn't just about setting a price, it's a really important sales tool itself. How you price says a lot about your product and your company. There are a few main types, starting with transaction-based models. The simplest is probably flat rate, just a fixed percentage, maybe plus a small fixed fee on every transaction.
Like you see with Square or Stripe for small businesses often. Simple, predictable.
Exactly. Great for SMBs who want that predictability. But the downside is it can get expensive if your volume grows and the actual underlying costs are kind of hidden. Then there's tiered pricing. This groups transactions into different rate categories, maybe based on card type or transaction size.
It sounds simple, but...
Yeah, it looks simple on the surface, but it's often really opaque. Businesses can end up paying much higher effective rates than they expect because most transactions fall into the pricier tiers. Creates frustration.
Leads to nasty surprises on the monthly bill.
Right. Which brings us to Interchange Plus. Now this one gets interesting. Our sources consistently point to this as the most transparent model. It basically separates the core cost, the interchange fee set by Visa or MasterCard, from the processor's own markup. Everything is itemized.
So the business sees exactly what they're paying for, the base cost and the processor's profit.
Precisely. This transparency is a huge advantage, especially for larger businesses. It lets them see costs clearly, optimize them, and it builds trust right away. It's a powerful sales lever.
No hidden fees. That resonates.
Definitely. Beyond transaction fees, there are also subscription-based models. Pay a fixed monthly fee, often in exchange for lower per transaction rates or access to premium features.
Good for businesses with high volume or predictable transaction patterns, like SaaS companies maybe. Gives the provider stable revenue too.
And, like GTM, you can have hybrid models here too, blending subscriptions with transaction fees.
So thinking about those models, particularly tiered versus interchange plus, why does that transparency matter so much in the sales process? It really comes down to trust, doesn't it? And competitive positioning. If your sales team is trying to sell a tiered plan, they first have to overcome the inherent suspicion about hidden fees. It's a barrier.
They're starting on the back foot.
Exactly. Whereas a team selling Interchange Plus, they can lead with transparency. They can say, look, we'll show you exactly what the costs are. No smoke and mirrors. That immediately addresses a major pain point for merchants and builds credibility. For many businesses trying to manage costs tightly, that transparency can be the single biggest reason they choose one provider over another. It's a huge competitive edge.
Okay, so this whole process, the strategy, the market understanding, the GTM, the pricing, it's really intricate. You obviously need the right people. What does a payment sales organization actually look like? It can't be just standard salespeople. Our sources highlight that it's really specialized, often needing a mix of skills. You absolutely need a strong payments product manager, someone who deeply gets the ecosystem, the tech, the regulations, and can ensure the product actually fits the market need.
The bridge between tech and market.
Right. Then sales and marketing, but they need to be skilled at more than just general selling. They need to generate leads in specific niches, understand B2B buying teams, and translate complex payment concepts into clear value propositions. You also often need a program manager, someone to coordinate everything, especially when you're working with external partners like banks or other fintechs. Keep the train on the tracks during deployment.
Managing those complex relationships.
And crucially, a legal and compliance specialist. Given the regulations we talked about, PCI, DSS, etc., you need someone ensuring everything is buttoned up. This isn't just about avoiding fines. It builds trust. Security is a selling point. Plus, fraud managers and risk analysts. Payments involve risk. You need people focused on preventing fraud and managing that financial liability proactively. It's a very specific team structure.
It really is. And because it's so technical and involves so much trust, the sales role itself changes, doesn't it? It's less about a quick pitch and more about education.
Yeah, our sources emphasize that. Sales reps in payments often act more like consultants or subject matter experts. They need to deeply understand the client's business and explain how the payment solution solves specific, complex problems. Which means sales enablement is absolutely critical. You have to equip your team, give them thorough training on how the products actually work, the underlying mechanics, provide them with data-driven insights about customer segments and market trends, and ensure marketing and sales are perfectly aligned with consistent messaging. They need the tools to be those trusted advisors.
And how do you motivate these specialized teams? What about compensation? The sources mention a few common structures. A base salary plus commission is pretty standard, especially for those longer, complex B2B sales cycles. Provides stability, but rewards closing deals. Sometimes you see margin-based plans, which incentivize salespeople to focus not just on revenue, but on profitable deals.
Makes sense, especially if pricing is flexible. And given the teamwork often required, team-based incentives can be effective too, encouraging collaboration between sales, product, and maybe even implementation folks, aligning everyone towards the same goal.
So you've got the strategy, the team, the comp plan. How do you know if it's actually working? What do you measure? This is where our sources stress a kind of dual focus. You need to track sales effectiveness, obviously, but you also need to track operational health because they are completely linked.
How so?
Well, think about it. If your payment acceptance rate drops, that's an operational metric. Customers will get frustrated, and churn will likely go up. That directly impacts future sales and retention.
Ah, okay. So operational problems can kill sales momentum.
Exactly. Operational metrics are often leading indicators of sales success or failure. A smooth operation makes the product easier to sell and retain. So yes, you track core sales KPIs, win rate, how long the sales cycle is, the average deal size, and things like cross-sell, upsell rates, which boost customer lifetime value.
Standard sales metrics.
Right. But equally critical are the operational and financial KPIs. Things like the payment acceptance rate we mentioned. Churn rate is huge, tells you about customer satisfaction. Payment processing time, is it fast and efficient? Fraud ratio and chargeback ratio, how well are you managing risk and security? And cost per payment, are you financially efficient?
So it creates a feedback loop.
Precisely. Sales insights can highlight operational issues that need fixing. Customers keep complaining about X. And operational excellence, like super low fraud rates, becomes a powerful selling point and helps keep customers happy long term. You need both sides of the coin.
Wow. Okay, so stepping back from all this detail, what does it all really mean? We've covered a lot, from why there's no general market, through trends, segmentation, GTM, pricing, teams. It's clear that selling payment products isn't just another sales job. It's really a masterclass in strategy, in being adaptable, and having a super deep understanding of a very complex, fragmented market.
It really is. And if we boil it down, our sources point to maybe three core strategic imperatives for any company in this space. First, be a strategic partner, not just a provider. Shift the conversation away from just features and towards solving fundamental business problems, improving cash flow, cutting fraud, boosting conversion rates. Make yourself indispensable.
Become part of their core strategy.
Exactly.
Okay.
Second, invest heavily in trust and transparency. Payments are built on trust. Use transparent pricing like Interchange Plus. Demonstrate robust security. Take a consultative sales approach. Make trust a key differentiator.
Build that credibility from day one.
And third, anticipate the future. This landscape changes constantly. New tech like embedded finance, evolving regulations, shifting customer expectations like instant payments. Your strategy has to be flexible. You need a culture that embraces continuous learning and adaptation just to keep up, let alone get ahead.
So the next time you tap your card or click that Pay Now button online, maybe pause for a second. Think about the incredible web of strategy, technology, regulation, and trust that had to come together just to make that simple action possible. What part of this deep dive, this complex world of payment strategy, might make you think differently about your own business, whether it's big or small?